Hello everyone, welcome to EPK Capital's deep dive video. In this series we analyze one company each day based on the security analysis by Benjamin Graham. Today we are going to talk about Grasim Industries. What if I told you there's a company that's been building India's infrastructure for over 75 years, spans across cement, chemicals, textiles, and paints, and is backed by one of India's most respected business groups? Today, we're diving deep into Grasim Industries, the flagship company of the Aditya Birla Group that's currently trading at around 2,815 rupees with a market cap of nearly 2 lakh rupees crores. But here's the burning question: is this industrial giant a hidden gem or an overpriced stock? Let's find out. The company and its promoters. Grasim Industries was founded in 1947, just 10 days after India's independence, making it truly a part of India's nation-building story. The company is the flagship of the Aditya Birla Group, controlled by Chairman Kumar Mangalam Birla, with the promoter group holding 61.39% of the company. What started as a textile manufacturer has evolved into a diversified industrial powerhouse. Today, Grasim operates across four main segments: cement, through Ultratech Cement; cellulosic fibers, where they're the world's largest producer of viscose staple fiber with 24% global market share; chemicals, second largest sodium hydroxide producer in India, and the newest venture into paints with Birla Opus. The leadership includes Managing Director Himanshu Kapania, with a strong board comprising both family members and independent directors, ensuring a balance between vision and governance. 10-year financial analysis. Let's break down the numbers that matter. Grasim has shown impressive growth over the past decade, with consolidated revenues growing from around 95,254 crore rupees in FY 2021 to 148,478 rupees crores in FY 2025. That's a compound annual growth rate of 11.7%. Revenue growth. The company crossed the 1 trillion rupees revenue milestone in FY 2023 and achieved record revenues of 1.31 trillion rupees in FY 2024. This growth has been driven primarily by their cement business through Ultratech, which contributes over 70% of their revenues. Profitability trends. Here's where it gets interesting. While revenues have grown consistently, profit margins have been under pressure. Net profit margins have declined from 9.4% in FY 2023 to 7.6% in FY 2024. The company reported a net profit of 99,257 million rupees in FY 2024, down 10.4% from the previous year. Debt levels. This is a key concern. Grasim's debt-to-equity ratio has increased significantly from 0.97 in FY 2022 to 1.90 in FY 2025. Their net debt stands at 1.68 lakh rupees crores as of March 2025, with an interest coverage ratio of just 1.9 times, indicating that debt servicing could be challenging if earnings decline. Return metrics. Return on equity has declined from 9.78% in FY 2022 to 5.23% in FY 2025, while return on assets dropped from 3.69% to 2.99% in the same period. These declining returns suggest the company is becoming less efficient at generating profits from shareholders' money. Technical analysis. Looking at the stock chart, Grasim has been in a strong uptrend since mid-2022, rising from lows around 1,270 rupees to current levels near 2,815 rupees. The stock formed a significant peak around 2,880 rupees in July 2024. Key technical levels. Resistance, 2,885 rupees, 2,900 rupees, previous highs. Support, 2,700 rupees, recent swing low, 2,500 rupees, stronger support zone. Technical indicators. The RSI is currently around 55, indicating neutral momentum. Moving averages show a bullish setup with the stock trading above all major EMAs. However, the stock has struggled to break above the 2,880 rupees resistance level multiple times, suggesting strong selling pressure at these levels. Chart pattern. The stock appears to be forming a rectangle consolidation pattern between 2,400 rupees 2,800 rupees, which could be a continuation pattern if it breaks higher. Benjamin Graham valuation. Now for the value investing perspective. Using Benjamin Graham's formula, I calculated the intrinsic value based on the company's earnings per share of 59 rupees and 90 paise and book value per share of 2,266 rupees and 91 paise. The Graham number comes out to 1,748 rupees, which is significantly below the current market price of 2,815 rupees. This suggests the stock is overvalued by about 61% according to Graham's conservative valuation method. However, it's important to note that Graham's formula works best for asset-heavy, stable businesses, which Grasim certainly is. But the formula doesn't account for growth potential or strategic initiatives like their paints business expansion. Pros versus cons. Bull case reasons to be optimistic. 1. Diversified business portfolio. Grasim benefits from multiple revenue streams across cement, chemicals, fibers, and paints, reducing dependence on any single sector. 2. Infrastructure growth story. With India's massive infrastructure push, the cement business, 70% of revenues, is well positioned to benefit from government spending. 3. Paints business potential. Their Birla Opus paint venture has achieved remarkable success, becoming India's third largest decorative paint brand within just 6 months of launch, with revenues of 2,600 rupees 2,700 crores in the first year. 4. Market leadership. Global leader in viscose staple fiber with 24% market share and strong positions in chemicals. 5. Strong parent group. Backing of the Aditya Birla Group provides financial strength and strategic guidance. Bear case reasons to be cautious. 1. High debt burden. Debt-to-equity ratio of 1.9 with poor interest coverage of just 1.9x raises concerns about financial stability. 2. Declining profitability. Net profit margins have compressed from 9.4% to 7.6%, and ROE has declined significantly. 3. Cyclical business nature. Cement and chemicals are cyclical industries sensitive to economic downturns. 4. Expensive valuation. Trading at P of 47x, well above historical averages and Graham's conservative valuation. 5. Regulatory issues. The company has faced CCI penalties for anti-competitive practices in the VSF business. Important checks. Controversies and governance. Grasim has faced regulatory challenges, particularly from the Competition Commission of India. In 2020, CCI imposed a fine of 301.6 crore rupees for abusing its dominant position in the viscose staple fiber market through discriminatory pricing. This was followed by another CCI order in 2021 for similar conduct. More recently, the company's paint business faced allegations from Asian Paints regarding anti-competitive practices, though CCI has ordered an investigation against Asian Paints instead. Global market position. Grasim is the world's largest producer of viscose staple fiber with 24% global market share. In cement, through Ultratech, they're India's largest cement producer with capacity exceeding 100 million tons annually. The company exports about 30% of its textile production, giving it global exposure. Corporate governance. The company follows strong governance practices with a balanced board structure including independent directors. They've won awards for ESG practices and maintain transparency in reporting. Conclusion. Grasim Industries presents a classic investment dilemma. On one hand, you have a well-diversified industrial conglomerate with strong market positions, backed by one of India's most respected business groups, and positioned to benefit from India's infrastructure growth story. Their successful entry into paints and the B2B e-commerce platform Birla Pivot shows management's ability to identify and execute new opportunities. On the other hand, the company faces significant headwinds including high debt levels, declining profitability metrics, expensive valuation, and regulatory challenges. The Benjamin Graham analysis suggests the stock is overvalued by about 61% at current levels. My take: Grasim is fundamentally a solid business with good long-term prospects, but it's currently expensive. The high debt levels and declining returns are concerning, especially given the cyclical nature of their core businesses. Investors might want to wait for a better entry point around 2,200 rupees 2,400 levels, which would offer a better risk-reward ratio. For those already invested, holding makes sense given the long-term India infrastructure story, but new investors might want to be patient and wait for a correction. Disclaimer: this analysis is for educational purposes only and should not be considered as financial advice. Stock investments carry risks, and past performance doesn't guarantee future results. Please consult with a qualified financial advisor before making any investment decisions. Do your own research and invest according to your risk appetite and financial goals. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel, and let us know in the comments which company you'd like us to analyze next.